when it comes to the trade uncertainty right now, perhaps no sector is more caught in the storm than the auto industry. And we just saw some of that today with the headlines around GM production out of its Oshawa, Ontario plant. But we also got some quarterly results from Magna, which of course is a global business and has activity all over the world. The stock has been underperforming today. And I want to talk a little bit more about the market reaction to that name and some general investing ideas with Grant White. He's a portfolio manager and investment advisor at IA Private Wealth. Grant, it's nice to have you with us. Love the uniform this morning. Go Jets. Now, when it comes to Canadian stories that have a global connection, Magna's a great example of that. What was your takeaway from what the company had to say? As I mentioned, the shares this morning have been under some pressure.
Yeah, I mean, I don't think that's much of a surprise, John, and thanks again for having me on, of course. You know, the Magna is obviously one of those, as you point out, one of those darling international companies that we have in Canada, and you know, it's a bit of a poster child sometimes for what's going on in the world. And obviously with everything that's going on, I mean, I think the uncertainty, you have to have a little bit of caution around a company that's so tied to, or it could be so impacted by tariffs and trade wars. So, you know, we're not surprised necessarily by the market movement this morning. Now, that being said, I think Magna is a great company. I mean, I didn't mind the reporting at all. I expect that we're going to see some weakness in the coming quarters. But if you've got a long-term perspective or on your portfolio, which I think you should, then I think Magna actually could hold a very nice place in the portfolio. It's a strong business. We like the fundamentals behind it. We've just got a short-term issue here in terms of tariffs, and if you took that away, I think that Magna's in a really good spot. They've made some great decisions around EVs and what they're doing in that space, and we think that they're going to perform really well over the long term. But we do expect there's going to be some hiccups. So where we're really looking at, I mean, we have it as a buy, but it's a buy that has a caveat that we don't expect a long-term trade war going on. And if that's the case, and then I think you can be really comfortable, or you should be looking for entry points on this company in the coming months.
So I guess, my observation in earnings season so far is companies by law have to talk to the analysts and say something, but it is so difficult to say anything truly tangible. I mean, I think Magna's a great example. Like they can point to what happened in the quarter. It looks like they had stronger vehicle production out of Asia, but this forecast they're providing doesn't account for really the sort of the potential worst case scenario for trade tensions. And I think that seems like the challenge with valuing businesses in 2025, even if, to your point, it's a good company and the long term still looks pretty good.
Oh, 100%. I mean, I think anybody who thinks they know what's going to happen in the next couple quarters is probably out to lunch, frankly. And I mean, they're like, things have been changing daily. It's nice to see that they've calmed down a little bit on this respect. But, as a company that's trying to forecast going forward over the next, like a short-term period over the next year, I mean, they really have no idea what's going to happen in the next couple of months, right? And so I agree with you. I think this is a mega challenge that a lot of companies are facing. I mean, I think it was one of the railways referred to this as an air pocket that they're going to see in the next quarter. And I think a lot of companies are viewing it the same way. I mean, whether you're Apple or Magna or whoever, you're dealing with a lot of the same issues as it relates to this in terms of like projecting for your business. And so it makes it challenging as an investor, but I do actually think that that's where the opportunity lies for investors, because it's not all the time that you get some of the short-term volatility that can create some pricing opportunities. And if you don't believe that the trade war is going to persist for a long-term period, like we don't, I think that we're going to see some finality to a lot of this, or at least positive momentum continuing on, in which case then we see this as more of a buying opportunity than anything else. And so when you've got a good company like Magna and you can buy it at a great price, and you expect good cash flows and a strong balance sheet going forward, then I think you can look at this as an opportunity more than anything else. And I'd ignore the noise. I'd stay away from there's reporting that has to be done and forecasting that's going to be missed, or perhaps like they're going to shut off forecasting altogether for a period of time. I would ignore that noise. I'd say focus on businesses.
And just to clarify as well, like that air pocket comment came from CN Rail on their call. Right. But the interesting thing with CN, like we've been doing these earnings updates through the morning, they still felt confident enough to stick with their general outlook for the year. I'm curious, when there are companies that are willing to do that in earnings season, does that give you confidence? I mean, is that a notable standout thing when most companies are having a hard time saying stuff? If a company says, nope, we're going to stick with our outlook, even though there's, tariff gloom out there.
Yeah, I mean, I think both railways, Canadian, like, whether it's CPKC or CN, they both came out with, I'd say, fairly strong reports, and for certainly, I mean, if I was a bit surprised, frankly, with how optimistic they were in their forecasting, but pleasantly surprised, obviously, because it gives a sign that just how, again, strong fundamentally the railways are, and that they're not overly concerned. Although obviously they did CN did bring up that air pocket. I think that's to be expected, and then we are going to see that, because I mean we've barely hit the impacts of the trade war and the tariffs at this point. So, I think it's wise for them to bring up the fact that there's going to be an air pocket, but at the same time, it's impressive that they're able to still forecast a very, very strong year. And certainly that gives us confidence in that company. And actually, when you're looking at the pricing of CN, I still think that there's a really great pricing opportunity there that you can get into this company. And then I think you're going to do very, very well over the coming 12, 24 months and beyond from that point. But, it's shown very strong, and you're absolutely right. I mean, the fact that they're maintaining forecasts, that's impressive at this time, at this stage.
Okay. Well, a lot to watch for there. Obviously, the rails depend on productivity in this country. Speaking of which, I think it's just after 9 o'clock local time. Can you just clarify, in Winnipeg on a Jets game day, when have things already shut down? Is this a write-off Friday?
You know what? Productivity. I was chatting with our mayor last week, and he says the longer the Jets go, the better it is for all of Winnipeg. So everybody's out spending their money. We're keeping the economy going, and the longer they go, the longer that whole trail goes. So,
I like that. Yeah. Well, we can use it these days in Canada. Thanks very much, Grant. Appreciate your perspective as always. That's Grant White of IA Private Wealth on a couple of today's earnings stories, and we're going to